Hi, everyone, and thanks for the chance to chat to you today about where Installments is going, where finance is going, and what we see as the future. And can I say that everything in finance is fundamentally changing at the moment, from what we think of as a bank, what we think of as payments, what we even think of as credit. And the way that change is coming about and the pace of that change is much faster than many people realise right now. And I think in a few short years, we're going to be seeing a fundamentally different landscape that we operate in. To start with, though, I'd like to share a little bit about who Humm Group is, what we do, and why we believe that instalments are the way of the future, more so than the current financial instruments that are in place. And that's really important in terms of what we're trying to achieve. So revolutionise, not evolve. So people aren't looking for evolution, they're looking for a fundamental difference on why and how they shop. Secondly, it's how people buy. It's not how people get credit. It's not how people finance. It's how they buy. And you don't have to think back very far to all of those massively expensive big brand TV ads that banks used to run about how they built communities and created lives and enabled you to do things. And people never really believed that. The dissonance in people's minds was too strong. Because what banks did, like all finance companies, was lend you money to buy a house. And if you use it to buy a house and then you stop paying them back, they'll take the house away. Finance doesn't build industries. It doesn't build communities. It allows people to make decisions to buy things. And so what's happening in the new generation of finance company is they aren't focusing on the transaction. They're focusing on the outcome of that transaction and how they create great customer outcomes, how they create better customer outcomes than the past. And what's more is how they create a seamless flow from I want a pair of shoes to I have a pair of shoes. It's not about the finance in the middle. But firstly, a little bit about Humm Group. So we're an ASX-listed company. We have businesses, operations in Australia, in New Zealand, in the UK and Ireland, and coming soon in Canada. And that in itself talks about how quickly the world is globalizing. There are not many fintechs anymore that are just in Australia or just in America. They're actually going global really fast. We have 2.7 million customers. We lend about $2.5 billion to $3 billion a year, and we're growing at a rate of about 40% a year. And I know that even 5-6 years ago, you could talk about a credit card book growing at 5 or 10% a year and be growing faster than market. Now, 40, 50, 60% growth a year off a large base is still not considered fast enough by many people. So what we're seeing is a massive shift to the scale and the growth that's happening in the industry. The second thing we're seeing, obviously, is the massive rise in buy now, pay later, which is just a short-term installment. And we'll talk a little bit about that as we go through the presentation. The second thing I just wanted to cover about us is our sense of scale as a market leader in buy now, pay later, over $500. A lot of people talk about installments and think about those kinds of that way to pay as being about, as I said before, just a pair of shoes. But what we focus on heavily is the larger installments. So getting solar on your roof, getting healthcare, doing dental work, getting some renovations at home. And that's growing exponentially. And we're seeing that more and more customers are saying, I don't want to get a traditional personal loan. I want to actually put that on an installment payment. In terms of a non-bank financial institution, we're the leading issuer of financial services of credit cards in New Zealand. And we're also the number one buy now, pay later financer for home improvements in Australia. So there's some things that we've learned over the last few years around where installments have come from and where they're going and how you can win in that market. So I strongly believe, and we as a company believe, that financial services is at a tipping point right now. And it's interesting because I started life as a journalist, and when I started in newspapers at the time, everyone was saying, well, the death of the newspaper is nigh. You know, in a few years, newspapers won't exist. And that was quite some time ago. And 20 years later, newspapers still existed and were still being profitable and still operating. And so you looked at it and went, well, were all those people predicting that newspapers were going to die? Wrong. And in fact, they weren't wrong at all. What often happens in these cases is, as someone once described to me, the cliff is further away than you think, but steeper than you think. And so newspapers are now effectively dead, right? And that happened much quicker than expected once the tipping point got hit, but it took a lot longer to get there. And financial services is following the same trajectory. So at the moment, the traditional finance organisations, the banks, are doing incredibly well. So mortgage rates are coming down, interest rates for them are coming down. To borrow the money is coming down faster, margins improving, they're making more money. But the reality is that even only a few years ago, most banks were saying that buy now, pay later was a fad. And now they're all getting on board with this because they can see that customer choice is fundamentally changing. And it does make me think a little bit also about the early 90s when personal computing was booming. And if you think back, for those of us old enough to think back to the 90s, the personal computing industry was really complicated. And you had to make some choices when you purchased. So you had to choose, what operating system did you want? You had to understand what RAM was. You had to understand what a 386 or a 486 was. You had to choose a brand. You had to choose. So there was so much choices. Did you want your 2400 modem built in, or did you want that external? And it's kind of laughable now that you had to learn so much about computing to buy one. And that the choices were so binary. If you bought a Mac, you couldn't use Microsoft Word on it. If you bought a Compact, they had a completely different operating system at the time. So all of that features, focus on features and focus on technical aspects drove your decision making. Take it forward today and it's quite a different picture. But if you look at financial services, you're having to choose a bank, and then that's probably where you're going to get your mortgage. A few years ago, that's where you had your credit card, that's where you had your transaction account. And they were selling those accounts based on features, not benefit to customers. So virtually every organisation is talking about disruption now. And I've always loved the saying that if you don't like change, you're going to really hate extinction. Change is difficult. We've been through that as an organisation. So 10 years ago, we were making money out of doing consumer and commercial leasing. And that industry largely doesn't exist anymore. And we've pivoted into installments and taken that and actually grown exponentially that business. And so every organisation is having to go on that journey. But the biggest thing about change that's really hard is people don't always see why change is important, and they don't always believe what can happen in the future.
And what I've learned is that every average Joe wants one thing, and that's to seem rich.
Not to be rich.
To look rich. It's about face.
Picture it's Saturday night, and you're going out with your best girl.
You promised her lobster, but there's a problem.
You've only got $2 to your name.
But you're not afraid, because you've got this.
Is that... What is that?
I call it a credit card.
Accepted at stores and fine dining establishments around the country.
Can't pay for the meal today? Put it on credit. Pay for it tomorrow. Plus interest. That's the key. We've already got about 100 businesses signed up in the colored community around the state.
It's heavy.
Well, that's just a prototype. The real card could be manufactured from a lighter material.
For instance, there's a lot of exciting things happening these days in plastics.
So the clip I just played was from a TV show called Fargo, and it's not a true scene, but we can all recognise the truth in it. The concept of pitching a credit card that was a little bit of plastic that would allow you to pay for things on trust almost seems absurd back then, but now we look at it and go, it's every day. And the hardest thing for all of us to do in business is imagine what does it look like in the future what does the future look like when things that are so different now that we can't imagine will become the everyday. And there's three big drivers that are really going to influence what happens in the financial services sector over the next little while. The first one is merchants or retailers, so the people where you obviously go and buy things. Their world's turned upside down, and COVID has only sped up that change that's happening. So obviously, e-com is a massive part of every business these days, but not every business is set up to do e-com well. And one of the trends that's come up in the last 3 or 4 years that's actually led to the massive rise of buy now, pay later is the need to not only get more customers to your website, but to convert those customers in a sale when you don't have someone standing over them saying, you look great in that shirt, you should buy that dress, we're on sale today, etc., etc. So the rise of buy now, pay later was all about saying that that $200 pair of shoes is actually going to cost you $40, and therefore you can buy it today. And it was focused on one key metric, which was abandoned cart. So every e-com retailer wanted to reduce the amount of abandoned carts, close more sales, and sell more goods. It's pretty obvious, right? But the thing about e-com is it's accessible from anywhere in the world. So the corner store is not only able to sell globally, but their competition doesn't become the store down the road. It becomes every other store in the world. So they've had to get a lot more, really rapidly increase their understanding of analytics, of how they sell, of customers, and that funnel that we talked about where, how do you go from someone putting an item in a cart to converting that to closing that cart sale. So merchants are obsessed with this now. And financial services have proven that they can actually help convert more sales in an active way. So increasingly financial services, the websites for financial services companies don't even talk about finance anymore. They look like a marketplace. There's rumours in the last few days about PayPal buying Pinterest. And you go, why would PayPal consider Pinterest? Because it's just a big marketplace. It's how they'll actually make PayPal relevant is by turning Pinterest, I suspect, into a massive Etsy, into a massive marketplace. The second thing that's changed is obviously technology. And with technology changing, it's allowed us to scale rapidly. It's allowed us to build networks rapidly. So you used to have to rely on, say, a MasterCard or a Visa card scheme to reach merchants and close transactions. You used to have to invest a huge amount of money to build networks. And now with integrations like Shopify, Adyen, BigCommerce, etc., you can reach thousands of merchants by plugging into one integrator. Or you can reach thousands of merchants with really simple APIs and connections into those merchants. And so it's allowed financial services companies to scale in a way that wasn't possible before. You don't have to have thousands of people on the ground walking around putting FPOS terminals onto counters. You don't have to put signs in windows anymore. You don't have to print a whole lot of brochures. And so that scale means that the ability to make money at a much lower margin but a much greater scale has become possible. And that kind of leads into my third point of how much customers have changed. And one of the things that customers wanted is they want better value and more transparency of cost. And buy now, pay later does both of those things. Installments does that. So it's really clear what you're paying and it's really clear what you're being charged. So if you go get a traditional credit card, explaining how an interest-free period works, then compound interest works, and then how you best manage that is actually reasonably complex. If you look at a mortgage, right at the start, everyone's got better at explaining how mortgages work, but explaining a table mortgage and how that works and the intricacies of that is really complicated. We all know that there are fees, many of them, which thank God have disappeared, around getting charged money to withdraw your own cash out of a bank. Now seems absurd, right? But even 5 years ago, that was a major revenue stream. So customers want to pay less and they want greater transparency on what they pay. And when they pay, they expect a really clear value in return. We don't see any resistance from customers to pay fees as long as that fee delivers something of value to them. But even more than that, customers have changed how they think about finance. We talk a lot about millennials and Zoomers and how they want everything now and they're impatient. But there's another part to that generation that we don't talk about as much, and that's how financially conservative they are. So a recent survey pointed out that 73% of boomers think the most financially responsible way to buy things on credit is a credit card. Whereas if you look at what the Gen Ys think, it's completely different from that. So it's only 23% who would ever use a credit card. The vast majority believe buy now, pay later is not only more responsible, but it's easier. So you start to look at that and you realise that not only are they more financially conservative, probably a little bit more financially savvy, to be candid, but they're demanding much better value. At the same time, they trust banks less and they get their information in different ways. So 60% of Zoomers' primary source of information is social. And that doesn't mean that information is not accurate. It's just coming from different sources. 10% get information from the news. 9% actively avoid the news because they don't trust it or believe in it. So you combine this with the fact that they're not trusting banks as much as they were, and that they're looking for new ways to buy and pay, which is why you've seen such a rapid rise in fintechs and forming strong relationships with this generation. So then why installments? So everyone, when you think about installments, thinks about someone buying a pair of shoes for a couple of $100 and spreading that over a period of time. But installments have actually been with us for a long time. You know, most of us pay our mortgage in a regular installment, and you talk about increasing that amount. We actually pay our personal loans in the same way. But we've been doing at Humm Group installments at a much bigger scale also for a long time. Solar, for example, where customers might be spending $10,000, $20,000, $30,000 and paying it back over 6 years. And what makes those installments different to, say, a traditional mortgage is there's no interest being charged. So the customer knows that if they make that installment payment, they're not going to be charged can never be charged interest. But there's also a fee attached to that, which makes it really clear and transparent the value exchange they're getting. And when you add that up against a normal mortgage payment, yeah, it's greater value, but that's not why customers choose it. It's because the cost of those installments are able to be shared amongst different parties. So the merchant pays a little bit and the customer pays a little bit. Combined, they're all paying less than you would on traditional insurance. And so that's why companies like ourselves have to be so lean to be able to make a profit from that in the margin. So where to next? So there's a couple of big trends that are happening that we will all be aware of in the financial services sector. One of them that's talked about a lot is open banking. And it feels like so much change that happens in the world that it's taking a long time to become a reality. And we've talked in the past about open banking theatre, where everyone says they're doing it, but in reality, it's not happening. It's going to be here soon. And as a result of that, it will be able to fundamentally change the relationship a customer has with their own data. And why is that important? It means that the customer is in control of creating the own experience they want and have been able to create a single experience that is customised to them, not driven by what a single financial institution says. It means that they'll be able to build up their own financial life from multiple different institutions rather than just one. And you already see this with Buy Now Pay Later, where 51% of customers have a relationship with more than one Buy Now Pay Later company. And they don't do that because they're just trying to get more and more credit. They're doing that because they're actually wanting to use it in different places where it's available or not, or they're preferring different features or different benefits from different Buy Now Pay Later companies. So with open banking, as we've seen in the UK where it's so dominant, you know, I can choose to have my transacting account with a bank. I might have my mortgage with a bank. I might have my credit card with a financial services organisation that's not a bank. And I might have 2 or 3 Buy Now Pay Laters. I might have a share portfolio with a Hatch or a Robinhood. And I might be trading cryptocurrency with a different provider again. But all of that can sit in what's going to be called a super app. And Revolut's a company that you can look to see how they're leading this kind of thinking. With a super app, I can pull data from multiple sources and control my life within my financial life within that app. I can have great budgeting tools. I can understand where transactions are coming in and going out. And I don't necessarily have a relationship directly with some of the companies who may be providing me credit or a transaction account. And why that's really important is it means that organisations like ourselves, as we've seen, like with Afterpay, Zip, etc., are able to offer things like a bank transactional account. And the thing that's going to be really interesting to observe is, does that turn a bank into a wholesaler and Buy Now Pay Laters into the retailers with a customer relationship? Or are banks able to fight back from that? And who knows where that goes? We obviously have our views, but what it's going to mean is increased competition. Increased competition, as we know, creates better customer outcomes, and that's the exciting bit for us. The second trend that's happening as a result of that is profit pools are shrinking. And I alluded to this before when I talked about how the merchant pays for a bit and the customer pays for a bit. With the profit pool shrinking, that means that large organisations who aren't agile will really struggle to keep pace with the change and really struggle to match price that the customer is prepared to pay and for the value they get. And that's going to create a lot of pressure on those organisations. If you want to look at an industry where this is most prevalent within financial services, money transferring. So organisations like Western Union used to charge a large margin to transfer money around the world. And you look at the rise of companies like TransferWise, now just called Wise, who are doing that same service much quicker, just as accurately, at a much lower cost. Something that might have cost you $100 now is costing you $5. And so customers have obviously adopted that at a great rate. And they've adopted it, which has given TransferWise a huge market share. But what's even more interesting is it's made those other companies much less profitable. So it's reduced the size of the profit pool. A couple of companies have come in and own most of that profit pool now. And I'm absolutely confident we will see the same in so many other parts of the financial services industry. I've talked a little bit about super apps. The other big trend that we're going to see is the rise of ecosystems. So when you talk through all the things that might be in a super app, it's really, really hard for one company to provide that. And financial services has traditionally been a win-lose situation. I want to get the customers as my customer. I want to sell them as many services as I can, and I never want them to go anywhere else. And that's not the future at all. The future is I will help a customer have a great experience. I'll help that customer to choose which providers they want to use. If they want to use other providers, I'll help them do that as well. The main thing I want that customer to have loyalty to a way of transacting and a way of buying that I'm a part of the ecosystem, not the whole ecosystem. So some examples, we obviously partner with EML, and we partner with them to provide our ability for a customer to download their Humm Buy Now Pay Later app and then to actually push a scheme card, which is with MasterCard, into Apple Pay or Google Pay, go into a store, tap, and actually transact straight away. Now, we could have probably built that ourselves, but it would have taken longer. It wouldn't have been as global as what EML offer, and we wouldn't have been as cost efficient to do. So, for example, we've launched in the UK using EML, and we're also in Ireland using EML, and we're going to be in Canada soon using EML. And that ability to go globally for us would have taken a lot more time and effort. We're obviously looking at some of those things I've talked about, like how do we actually offer share trading, crypto, bank accounts. There's no way that Humm Group is ever going to become a bank and get a banking license in every market we want to operate in. And the great thing is we actually don't have to. The great thing is we'll be able to pull in banking services through open banking and actually offer that back to the customer. We're also seeing a massive amount of interest from, dare I say, many of the banks who said buy now, pay later was a fad, globally talking to us now to say, can we partner with you to offer these services? And they're not even talking from a perspective of saying, and we'll need to brand it, the name of our bank. They're saying, actually, we see value in having other brands associated with our customers. The partnership that we announced with Westpac New Zealand earlier this year actually picks up one of our key brands, Bundle. And what they're using is just not the product, but also the brand to attract younger customers effectively to the bank. And we benefit from that also. So the winners in the future are going to be people who understand the technology change, they're agile enough to adapt to it. And lots of companies can do that. But the big defining force will be companies that can partner, that can build ecosystems, and don't hold on to having to do everything themselves. Right at the start of this presentation, I talked a little bit about how computers were sold in the 90s, which may seem a bit tangential, but that whole concept of selling a computer based on features rather than benefits, that whole notion of selling something that you have to make a binary choice and it's a forever binary choice is just not realistic anymore. And one of the recent ads from Apple actually show how far that this industry has come, when they're actually saying that your next computer is not actually a computer. There's no talk about the size of the memory, what kind of chip it has, what it can do. It's actually just positioning it as a lifestyle choice of a way to lead your life and to engage with, whether it's the internet, with other parts of technology, but it's not actually about the computer itself. And what I truly hope and what we truly believe as a company is that is where financial services will end up, where we stop talking about interest rates, we stop talking about rules and regulations. We actually start talking about how financial services can make a life more enriching, more meaningful, and how we can actually make customer outcomes and great customer outcomes at the core of everything you do. And if we are able to do that, not just as Humm Group, but as an industry, then what I'd love to see an outcome of that is that customers start to trust in financial services a lot more than they do now, that customers and merchants can see the value we add to their lives and can add to their lives, and that we're able to actually work together in ecosystems, not in a win-lose model. And I also believe that Australia is uniquely positioned, given this is where buy now, pay later has really grown from, to become a world force in this change. Thank you for your time.